We've incorporated in China in 2007, and in the last 15 years, our journey has been very consistent. So we were the first to open a branch in the free trade zone in Shanghai. We were the first to start issuing local currency government bonds in Shanghai. We are the only foreign bank which is a settlement and depository of the INE exchange in Shanghai, and we're a big player in that exchange. And so we've been very fortunate that we've got consistent support from the authorities to continue to build our business and franchise. As we go forward, we're still very bullish. And in particular, we're bullish about the Greater Bay Area. We think the possibilities of leveraging a Hong Kong presence to build a far more meaningful business in Guangzhou, in Shenzhen, in that whole region in the 9+2, we think that's extremely powerful. Most recently, in the last month, we've just announced an investment. We're 13% shareholders, the largest shareholders in the Shenzhen Rural Commercial Bank. It's $1 billion investment, and again speaks to our desire to be able to go deeper into that province and into that part of China.
DBS Securities recently received a green light to operate a joint venture in China. How significant is this for DBS, and how will this help DBS to serve its customers in China better?
China's presence in the global capital flows is minuscule today. It is much smaller than the size and heft of China as a country. Sooner or later, China is going to have an equivalent role in capital markets as it does in the trade markets. And this is going to be the single biggest opportunity in our part of the world in the next 10-15 years. It'll happen gradually because China is sensible. It'll open its external account gradually. It'll internationalize the renminbi gradually. But you can see the direction of travel is all in that direction, is going there. So as that happens, you'll see a lot more capital flow into China. You will eventually see a lot more capital flow out of China. So to build a business and opportunity to intermediate in those capital markets, a two-way flow of capital, deepening and creating liquidity, providing products and services to Chinese individuals and Chinese savers is going to be a big opportunity. So like many other global players, we're very keen. The way we are approaching it, of course, we could also have applied for a 100% owned vehicle because the rules changed. But we today have a 51% vehicle, and our partners are SOEs, which are entities of the Shanghai government. We think it's a constructive partnership, and we have the option to be able to increase our stake in this vehicle over time. We think it will be meaningful not just for the capital markets, the DCM and the ECM activities. I think it also helps us as a commercial bank because we're a commercial banking entity. So there are a lot of infrastructure services we can provide alongside that. So custody services, exchange settlement services, to intermediate two-way flows in and out. So I fully expect this to be quite material.
DBS has always positioned itself as a leading bank in Asia. How do you think Asia would emerge from this pandemic?
I'm a big bull on Asia because I think the megatrends that drive Asia are very much intact. So the first of that is really a mass growing consuming class. Hundreds of millions of people are hitting their stride, and you can see that in the streets of Vietnam or Jakarta or Bangkok or Mumbai. I think consumption matters, and you're beginning to see this big thrust of consumption increase in Asia. The first cousin of that is wealth creation. You're also seeing a massive creation of wealth in Asia. More billionaires get formed and millionaires get formed in Asia than any other part of the world. So the consuming class and the creation of wealth is a substantive mega trend, and I don't think that's disappearing anytime in the next 10, 15, 20 years. The second mega trend around Asia is infrastructure-driven investment boom cycle. Third, I think Asia is integrating. You can see as a consequence the V-shaped recoveries that Asia has seen both in 2010 and now last year after the pandemic. A large part of it relates to the flows within Asia and the consumption within Asia. Asia is becoming more and more self-sustaining. And I think the last megatrend around Asia to me is the digital transformation trend. And some of it is linked to the demographics.
Sir, so we are 1.5 years into this pandemic. There was hope last year when the vaccine rolled out in the big way, we'll be out of woods. But now it doesn't look like this is the case. The countries, we're still seeing different spikes and different waves, different variants, and the world economic recovery is uneven, to say the least. What's your opinion on the global economic situation in the coming month?
I think the economic rebound has been very vibrant, actually. If you look at the original expectations were the global economy would get back to 2019 levels of GDP only by 2023, some even said 2024. In reality, in many countries, the countries will hit GDP levels of 2019 by the end of this year and certainly next year. So the rebound's been sharper and quicker than most people would normally have expected. Now, it is true that the recovery is uneven and that we continue to be impacted by subsequent waves of the virus. We haven't got it entirely under control. But I think that really results more in sectoral impact. And therefore, tourism, travel, F&B, the hotel industry, I think some of these sectors will take longer to recover than others will.